All right, here now to help out Kingsview Wealth Management CIO, Fox Business contributor Scott Martin, Federated Hermes portfolio manager, equity strategist Steve Chavarone is with us as well, and Bulltick Capital Markets chief strategist Catherine Rooney-Vera. Catherine, let me just start with you. I think everyone kind of felt like, golly, this was parabolic. Now, I think the good news was that a lot of these stocks were going up on good news, but they were certainly getting over their skis. So what do you make of the last three sessions?
I think it's profit taking. I mean, these stocks, these FANG stocks and tech sector have been remarkably bid up. And by retail investors, Charles. I mean, you have a quarter of the market now owned by retail investors who are flooding into two names. Historically, in the past few months, it's been Apple and Microsoft. So, look, this is profit taking. I think it's an opportunity to buy. I even like, the tech sector. It's been incredibly beaten up. And my bet is that we're going to get both fiscal and monetary stimulus in the short-term horizon that's going to take these markets higher.
Hey, Steve, welcome to the show. Let us get your thoughts on just what we're seeing in the last few days.
Look, I think it's a technical-driven sell-off. It's certainly not on any bad news. Today's unemployment report showed that unemployment fell 6.5% almost in the last 4 months. That's more than it took us 9 years to do that after the great financial crisis. So I think, look, the big story here is that you have an economy that has exited recession. It's over. We're in recovery. We're seeing that in the data. You have some technical selling over the last couple of days because indices got, at certain levels above their 200-day moving average that triggered some technical selling.
Right.
But ultimately, we think that this expansion has a long time to go.
So let's talk about then how the market turns around from this little bit of an air pocket. And Scott, I got to start off by first and foremost giving you a shout out. You gave us Bloomin' last time you were on the show. It's up well over 5% in a week while the market is struggling. I mean, you've been on fire, my friend. But what is it going to take now to sort of turn this whole thing around?
Yeah, I wondered why they put a fire extinguisher in here today, Charles. I guess that's why, because I've also been talking about financials, And that's the story, though, like Catherine was talking about, which there's been some technical selling. There's been some profit taking, as Steve said. And really the reality, Charles, in my mind, is that the market is going through a little bit of a shifting phase. And it does this at times. We forget about it because the times are so good when the FANGs are rallying and going crazy, and the Data Dogs and the Palo Alto networks and the Fastleys and the Zooms and the DocuSigns can't be stopped. But when you look around and stop and say, look around for a little while and realize that financials were underdone, they were underappreciated, restaurants, like you mentioned, Bloomin' and Darden restaurants, and also travel stocks have held in there very well. So like the Expedias and LUVs like we talked about, Charles, those are areas I'd start picking up here as the market starts to, say, collapse on the top side.
Mm-hmm.
No, I get where you're coming from, and this has been a topic of ours for a couple of months now. But, Catherine, here's the thing, and I do want your thoughts on allocation. There have been so many false alarms, over the last 2 or 3 months that growth to value rotation goes for about 48 hours, and then we snap back to tech. But I'm with Scott in the idea that, if we start to broaden this out, particularly with some of these names that reflect the economy that Steve just described, it seems like you would want to have parts of your portfolio tethered to that as well.
Absolutely. And I think financials is a fantastic one. They're very undervalued. They've dragged the broader market upside. But I'll add to that, not just banks, but industrials. I think industrials are also part of the recovery story. And we are effectively, as your other guest said, we are in recovery. The recession is over in the sense that a recession is 2 quarters of negative growth. We're beyond that. 3Q is going to be 20% up. 4Q is going to be positive as well. And if we do avoid a double dip recession, which I think we will, then you do want to rotate into those value names, but hold on to your tech. And if tech drops, 7%, then I don't think it's a bad idea to just jump in that too. The fact is that technology is here to stay, and we're all using it, and that's not going to die. So take these opportunities, buy into tech, and continue to accumulate in the rotation stocks.
Steve, I looked at a couple of clips of you earlier in the summer, and so you were a little overweight equities. You like some of the small caps. And I think now you also are expecting something of a broadening for this rally. We've looked at market breadth as a red flag, but you say we should be encouraged here?
Yeah, I think the headline here isn't one of rotation as much as it is broadening, right? the market has been narrow, that's right. But when that occurs at the end of a cycle, when all other names have hit their 52-week highs and nothing is left to push you, that's worrisome. But here, we're in the early part of a cycle, and the names that did well in the recession have let us out, but that's dry powder in our view. And so we think it's going to broaden out to value names. We think it's going to broaden out to small caps. We think it's going to broaden out to international. As the economy recovers, those parts of the market that need that recovery are going to start to get it. And this is going to be a broadening story. And we're seeing the beginnings of that, I think, over the last couple of days.
I think we are, too. Scott, I'm going to give you the last word here and give you a chance to earn yet another fire extinguisher. What do you like? Give us something fresh, something new, or reiterate something, but that you still think maybe it's not too late for the audience to take a look at.
Well, I'm going to pick up on a point that Catherine made, which is that more stimulus is likely coming down the road, both, say, fiscally and monetarily. So, Charles, you know where I'm going with this. GLD, a position we've loved all year because it doesn't act like stocks, it doesn't act like bonds. And so in times like these, where volatility is coming, money printing is coming, we've got this like small little election coming up on November 3rd, which is likely to instill some fear in the markets. I think GLD is a good position in your portfolio to hedge out some of the risk that still remains out there.
Well, you know what? Not only did you answer the question, but you gave us a segue for the rest of the shows. You just named all the other segments that we're going to cover as well. That's why we love you, Scott. Hey, Steve, great job. We appreciate it. We're going to definitely invite you back if you'll come. And Catherine, you know we love you. Have a great weekend, folks. We appreciate it.
Thank you, Charles.
All right. Lawmakers.